Seems like there's a lot of questions out there between units and lots. And this is because depending on your broker dealer, you are trading lots or you're trading units. My preferred is units, especially micro units, because it gives you a ton of opportunity on the trim. Lots of flexibility there. But the same philosophy works with lots. So I thought, well, maybe what we should do is just talk about units versus lots. One lot is equal to 100,000 units. If you see me trading 100,000 units and you're trading lots, you can convert that and that would be one lot. But as far as like how you work the position, it's the exact same. You might start out with one lot and you get hedged at one lot. This is just a hypothetical example. You're now hedged up and the market has moved to where one of your positions is in the money 40 pips. Let's say each pip is worth 10 bucks. So every time the market moves 1 pip, you increase or decrease by 10 bucks. So if it was up 40 pips, you would have $400 in the money. If you're in the money 40 pips and you hedged at 30, now you're out of the money 70 pips. So you're actually out of the money $700. So you'd apply $300 to this. So what you would do is you would close of your one lot 0.43 lots or 42.9% trim. Okay, so you closed the long position, you took all $400, you pocketed $100 and you applied $300 across the top. And it left you with 0.57 lots. So now your long position is no longer active and you have 0.57 lots left. So market moves along and you end up picking up 0.57 lots. So now you're re-hedged, you're rebalanced, and the market has moved an additional 40 pips. So your 0.57 was out of the money 70 plus 30 plus 40. So 140 pips, $5.70. So this 0.57 position is now out of the money $798 or $5.70 times 140. Roughly, that's what your position over here is. And you're in the money $228, 40 pips times $5.70. So in this situation, you're going to apply $171 right there. So you're out of the money $798, you're going to apply $171, and so you're going to trim 0.12. This is the same thing as trimming on units. You're just trimming 0.12. So you trim 0.12, and so now you have 0.45 units left. Okay, so here you're going to have 0.45, and we no longer have anything on the long side. Okay, so we reset the board. Let's say it does this again. Now you are re-hedged, and so now you're 210 pips away. So $4.50 times 210. 0.45, you're out of the money $945, but you're in the money 40 pips here. So 4.5 times 40 is 180. So you have $180 profit. You're going to apply 135. You're going to close 0.6 of that position. So this is now gone. This is now gone. You now have 0.39 lots left. Now, let's say we're like a couple hundred pips apart. We now have a pretty good hedge. We have picked up this side at 0.39, and we're somewhere in the middle of our hedge. And we're like, hey, I have lowered my margin. I have enough margin to trade one whole lot. I'm now at 0.39. I'm going to go back in and start working from the inside. So let's say you're like, well, I just really feel like it's going to go down. I'm going to put in 0.50 right here. So now you're holding 0.89 lots, and let's say it picks up the hedge and now you're 0.89 on both sides. Nothing's really changed. You're still just trimming the hedge. So now we have 0.39 out of the money, right? We're in the middle somewhere, so we're at least like, let's say 150 pips away. So $3.90 times 150. This is now out of the money 585. This 0.50 lots moved 40 pips. So you got $5 times 40, 5 times 40. So that would be $200 that you're going to apply. So 200 right there. You're going to, that you have as gross profit, $200 of gross profit. You're going to apply 150. So now you're going to trim this position up here by another 0.1. So now you have 0.29 left. This goes away because you close this position completely. And so you're now off balance 0.4 lots. So you would re-hedge at 0.40. We're not even looking at a chart. We're just going through the math of how you run the hedge calculator. So to balance that hedge, you would have to put one in at 0.4, and then you just wait for another opportunity. As long as you can trim 0.01, I feel like you have a lot of flexibility even on lots to continue to trim that hedge. Don't be afraid to work a position with lots and or units. Do you have a little more flexibility on micro units? I would say yes. I mean, I would be lying if I said no. You might have to wait for to average at least a 0.01 on the lot. I don't know that it should feel like you are being held back. There's a lot of questions around lots versus units because you're seeing me trade units. If you're at a broker dealer where you're trading lots, it's the exact same strategy. You're just putting the decimal spot in a different place. On the trim the hedge calculator, up at the top up here, there's units and there's lots. Just make sure you're choosing which one you're trading, and then just focus on that. Hopefully this might help you on how to continually work the lots versus units.